This year's roller coaster for the Ukrainian economy keeps going, and after a lockdown-induced sharp decline in the second quarter, the economy showed a rapid recovery in the third quarter, exceeding the expectations of most economic forecasters. However, further growth momentum slowed in the autumn amid the new coronavirus outbreak, and at the same time, the positive news about vaccines has given a new hope that next year new waves of COVID-19 spread and severe lockdowns will be avoided, and the economy will get a new impetus for the return to the pre-pandemic trajectory. So we improve our GDP estimate for 2020, and now we see it in line with the Ministry of Economy estimate, minus 4.8%. And we reiterate our quite optimistic view for 2021 growth, plus 5.6%, and that is actually even higher compared with the government forecast. And that is much better compared with many peers and Ukrainian own experience during the previous crisis episodes. So the question arises, what is behind such optimism? So in addition to the standard catch-up growth, which I suppose many countries in the world will experience next year, I would like to highlight here the facts why we believe, as before, that the Ukrainian economy is much better prepared for this crisis compared with its previous crisis episodes. First, thanks to its structure, with a high share of agri-products and IT services, IT outsourcing services. And second, due to the strengthening of macro-financial stability after the crisis of 2014-15. Sure, from our point of view, the results in 2020 could be much better if the authorities fully took advantage of available opportunities to attract official funding and provide the economy with stronger fiscal and monetary stimulus. Unfortunately, our previous expectations of the second tranche of the IMF coming not earlier than next year were confirmed. I will not count here the list of problematic issues. Everybody knows them very well, starting from the NBU independence issue and finishing with the recent decisions of the Constitutional Court. And actually, this situation, is a quite good illustration of the words you may hear quite often about Ukraine, that the country has never lost the opportunity to lose the opportunity. However, there is the other side of the coin in this story from our point of view. Despite all obstacles, or maybe thanks to them, macroeconomic management in the country has remained extremely orthodox and prudent. And macrofinancial stability has not been jeopardized. Even more, external accounts, for example, look surprisingly strong. Current account runs surplus of almost 4% of GDP this year. Reserves are even higher than at the start of the year. Inflation is low. Banks are in quite good shape. And public finances metrics deteriorated only marginally. From my point of view, all that creates the right preconditions for the strong rebound if the authorities will be able to turn on the gear for the economy. And let's look at some details about that. As I said before, actually, the macrofinancial stability was not jeopardized, and although the banks increased their holdings of hryvnia bonds, government bonds, by significant 46% in the first 11 months of 2020, in particular exploiting the NBU refinancing loans and accumulated liquidity in certificates of deposits. So fears of large-scale monetary financing of the budget deficit have not materialized. both the NBU and the banking system, so commercial banks, have behaved rather conservatively. And given the limited funding from other sources, 2020 budget deficit will amount approximately to 5% of GDP, well below the planned and the corresponding level in other countries. Actually, the minister pointed out to some stimulus implemented in order to support the Ukrainian businesses during the pandemic. But frankly speaking, when we accounted for all tax exempts and all programs of the support of unemployed, including the partial unemployment or furlough schemes, Ukrainian furlough schemes here. So we come up with just 0.5% of GDP amount, so which is completely teeny amount compared with other countries. So you may see from this plot that Ukrainian current account, Ukrainian fiscal deficit of 5% is one of the lowest compared with peers. And fiscal impulse, when we compare the change of the fiscal deficit compared with the previous year, just 3% of GDP was really very, very low. So in 2021, if budget constraints are eased through the resumption of official funding, and the increased opportunities for borrowing in the domestic and financial and international capital markets, the budget deficit as a percent of GDP will hardly change. It means that the structural balance adjusted for the business cycle will decrease sizably, indicating quite strong fiscal impulse. And this impulse will be complemented by the monetary easing. First, inflationary pressures are growing very slowly in Ukraine, and we expect that in 2021, despite a sharp increase in the minimum wage, inflation will fluctuate close to the upper limit of the target range, 6%. Although the economy will actively recover starting from the second quarter, the global low inflation environment and some strengthening of the exchange rate due to improved external accounts will be important headwinds for the inflation. Second, global interest rates will remain quite low at least next year. And finally, the resumption of official funding should reduce medium-term risk for external sustainability and financial stability, and therefore the NBU will have arguments to delay the first interest hike in the new cycle until July, and we expect the rate to be raised by only 100 basic points to 7%, compared with 7.5% envisaged in October NBU forecast. As a result, you may see from this chart that on average real interest rate, the difference between nominal rate and inflation will be much lower next year compared with this year. So based on cyclical fundamentals, on the macroeconomic performance, Ukrainian economy is well prepared for the strong rebound. But of course, to launch it, we need not only vaccines in place, but policy actions to unlock needed financing and simultaneously improve the basis for sustainable growth in the long run. The recent authorities' efforts to resolve these issues and their willingness to cooperate actively with Western partners were encouraging. So that makes us to believe that this opportunity finally will not be lost. Thank you very much for your attention.